Aloha, everyone. Welcome to Java. Thank you so much for joining me, and special shout out to any Lions out there. I really appreciate you being here, and thank you kindly for helping support me as well. And hopefully, you're getting some value out of the content I put out. So let's get right into it. Starting off, it's Tuesday, November 21st, 2023. Thanksgiving is Thursday, so short trading week. We've got the MMRI, our favorite risk indicator, has come down quite a bit. We've got the relative dollar strength and the 10-year yield have both retraced quite a bit, and these led to a stock market rally because when the risk goes down, then the money flows into the market. So we're showing the futures are in the red, so they're kind of telling a different sentiment story. It's shifting right now. So going to say happy capital preservation Tuesday, because if you're trading today, that's really what it's going to be about. Watching your stops and making sure you're not on the wrong side of the trade. And if you are to get out quickly, take smaller cuts and then move to whatever you need to so you can be profitable. So the sentiment right now is cautious. There's a strong sentiment that the rally got overextended, at least for today in the short term. Could continue a bit. As I said, right now stocks are green, but there's a lot of anxiety coming in about the debt as well. 2 p.m., we will hear the Fed minutes will be released, and that could cause some movement in the market, depending on the language that they have used in these minutes. So we've also got Lowe's did their reporting, and they're the major home improvement chain across the United States. And they revised their guidance and their sales down, basically saying people are not taking on home improvement projects or improving their homes anymore. So their earnings and their sales have taken a hit. So today, as I said, we are expecting to get the existing home sales number at 10 a.m. So that's the real estate sector. It's a lagging indicator, but could be potentially moving to the market. And then 2 o'clock, the Fed minutes. Wednesday, we'll be getting jobless claims, and that's prior to market open. So if you swing trading, make sure you're positioned for that by the end of today if you don't do pre-market, post-market trading. We've got durable goods orders, and then also consumer sentiment, and that will be it. Closed Thursday for the holiday and a half trading day Friday. So this is a lagging indicator, but they're finally starting to catch on. We've got a record share of people applying for auto loans that were turned down for them. So people are not able to they're tightening the credit, and pretty soon they're leaning on the credit cards, and this is showing that basically they're going to start defaulting on the credit cards if they have to. And meanwhile, we've got the United States about to default in their own debt, and they can't keep track of their money. So what do they do in that situation? Well, they're going to regulate and they're going to make somebody buy it. So US Treasury market is debating around hedge fund collateral. So I'm going to break this down basically in case you're new or not familiar with the debt that's sold through Treasuries, everything that they promised to spend. They're not buying buyers on the open market. So what they're going to do instead is require that hedge funds and some of these pension funds must maintain a certain amount of treasuries to balance in their portfolios as a quote-unquote safe asset. And that way would take some of them off of their books. So you won't see this out in your mainstream media a lot. If you do, it's going to be a very small story, but this is what's going on. With that going abroad, Argentina, so this is big in the news. They've got a new president, and he basically sides with, as we're seeing this split go on, he is basically siding with the Western country, European Union, and America, talking about bringing back the US dollar because the Argentine peso is having such a difficult time and devaluing. So basically, the last president had said that they were going to join BRICS come January. Well, this just changed the whole alignment. So what's at stake with this? Quite a bit, actually. As I've said before, Argentina is rich in resources, particularly oil, and rare earth minerals. It's also a main venue for some other items, gold, as well as other things in the trade venues that basically America wants to get their hands on, get a hold of, as well as China. So, in retaliation, basically on the other side, we've got Russia and China de-dollarizing, talking about how they're almost complete. And what they mean by that, they're still holding a tremendous amount of US dollars in debt. They still have quite a bit of treasuries they're going to have to unwind. But 95% of their direct trade is now in their own national currencies. They're trading either in the ruble or the yuan. And they're not using the US dollar as petrodollar as they have been doing for quite some time. So with this, another blow is that China and Saudi Arabia just signed $7 billion currency swap agreement. So now bringing in Middle Eastern countries. We're going to see the fallout from this sooner or later. So another story I want to go into, because we're talking about artificial intelligence, is becoming the broader story, especially with the tech sector in the United States stock market. So this kind of was brought on by the United States. So they're talking about the new front opening in the US-China conflict. The US sanctioned chips, larger chips going into China. So mother necessity stepped in. China started finding and creating actually new technology that chained these chips into the media that they were using. So basically, they were creating a larger chip by connecting lots of smaller chips. And now this is a new technology that is working better than some of the larger chips. And now America is saying, hey, they need this technology and they don't have any of this, the ability to actually manufacture this. So they're probably going to have to outsource this, very likely to Taiwan. So we'll keep an eye on this. So we've got Amazon launching a program to train millions of workers in artificial intelligence. They did just do major layoffs for their voice assistant Alexa program. So this is on the back end of the whole thing with C3 AI getting shaking it up. Basically, Microsoft is trying to grab the top talent. Amazon now wants to be in with this. As I've said before, between Amazon, Google, and Microsoft, Amazon now has the data storage, and they're trying to grab the sector of AI, which is what they're missing. Okay, got a couple of lava updates because these are the back stories where it just looks like Amazon is training millions of workers in artificial intelligence. But the truth is they're trying to bolster their weak side. So we've got a couple of other stories that will go along with this. First, I'm going to bring up PLAID. If you're not familiar with PLAID, it's basically a payments system that ties in other payment systems. And so on the back end of this, when we're looking at all of these different ecosystems, we've got the Fed now and we've got the other ones in the Eurozone, they will need someone to kind of be the rails that will connect these, so to speak. And PLAID, I believe, is one of the companies that can complete this. So this gentleman right here becoming the executive to lead this in European operations, I think could be rather large, and we need to watch this as far as that's the next development towards CBDCs being available on a larger scale. So a couple other stories I want to bring up. It's actually together. So Securities Exchange Commission, United States again, suing Kraken. Kraken is crypto exchange. So their story is that they're saying that they're operating as an unregistered exchange. And they're saying that they're mixing user funds. Well, all of the exchanges do this. It's called pooled user funds. But really what they're coming after them is because they did not enforce Know Your Customer, which is forcing all of the personal data to be tied into the accounts. And so with this, we got a comment back from the Kraken co-founder, basically calling the SEC some names and saying that others should leave the US as well because of what they're doing. And I can't really disagree with that. So With that, I want to wish you all a profitable trading day, just wonderful day in general. Thank you so much again for joining me. And until I see you again, my friends, stay free.